This video is sponsored by Bityard. With over 400 cryptocurrencies to choose from on their spot exchange, dozens of USDT pairs for futures trading, perpetual coin futures, trade commodities like gold, silver and oil, Forex, and major indices like Nasdaq. You can buy crypto from Bityard with over 50 different fiat currencies, using Visa, MasterCard, Google or Apple Pay. If you like, you can use their copy trade facility, follow other traders who will execute trades on your behalf, or become a copy trader yourself. So if you want a bit of that, click the link in the description. Hello everybody, welcome back. We're going to have a little think about Bitcoin. We're going to think about the economy, I know, boring, stocks as well, and what's a fair value for Bitcoin and entry points into stocks. So it's going to be a little bit complicated. We're going to try to strip it down as bare bones as possible. So we'll start with Bitcoin. So first of all, Bitcoin is still looking relatively droopy here. Another 8th candle here. Again, it's only just created. It's Monday. All right. We haven't closed this candle yet. But if we can hold above this summer lows between 28-29, then that's okay. Invalidation for any kind of potential upside that I'm suggesting on Bitcoin will be invalidated below about 28,000. And we'll be looking to maybe revisit these previous lows and maybe even a little lower, down to our 200 exponential or in between the 200 simple. So we're talking 22,000 or 25,000. My entry point obviously being at 24. Right, so charts don't look good. We've got short signal on the weekly. That doesn't mean it plays out immediately. If anything, I would imagine that if we can hold this low, we will move up to the top of this trend line, which is about mid-30s, and that's where we would find a rejection, and that's where this short signal may play out to the tune of, you know, maybe back down to these levels. So that's what I'm looking at on the long term, as in like a weekly chart, right? So let's take it down to a 4-hourly chart, see what's going on here. 4-hourly chart getting rejected on the center of the Bollinger Band, still holding up obviously in the summer lows. The summer lows are represented by this this horizontal, but also the 4-hourly Bollinger Band is still there as well. So we can see that there's relevance on these Bollinger Bands, getting a rejection here on the 50 exponential moving average. 1, 2 4-hourly candles gotten rejected from there. So to me, what this suggests is if we do manage to hold here and get above here, this is going to creep down and we can break outside of the 50 exponential moving average, which could take us up to this 200 exponential moving average on the 4-hourly. Again, that's descending. It's descending quite fast, but that again would take us up to around the mid-30s, and that's what I'll be looking for. Again, what we're looking for is a break of the 50 exponential moving average on the 4-hourly, and to hold above the Bollinger Band and the horizontal, which is around the summer lows, 29,000. We need to hold above there to get that. Now let's take it to the daily, and we can see they're getting rejected on the 10 exponential. So again, yeah, this isn't a good look. This is a bearish engulfing candle as it is at the moment. So we need to see how this one closes. And again, this is the beginning of the day, and there's still plenty of time for this to resolve. But at the moment, that's quite a big rejection there. And with a candlestick formation like that, it's a bearish engulfing candle. So it does suggest further downside, at least for the rest of the day. So a difficult one to navigate through, because we're basically looking at a very small range. You know, this is the range that we're looking to play, and it's going to break one way or another. And obviously the supports stay the same, and the resistances get lower. So it depends on the momentum. And at the moment, momentum is dwindling. We are not really getting a great deal of shift in momentum. Not on the longer term time frames. The money flow index still creeping down, suggesting people are getting out of spot positions at every opportunity. Nothing's really coming into that. So look. 10 exponential rejection. Let's take that over to our Nasdaq. So this is Nasdaq on the pre-market. So obviously the Nasdaq's not opened yet, but this is your pre-market for what it's worth. Not even a pre-market, but a 24-hour traded market here. Getting rejected on the 10 exponential, just like Bitcoin was. Interesting. We go to how it closed prior to the pre-market over here. This is last week's closure, and obviously we didn't reach it. So what we're thinking about now is what's fair value for buying into things, whether it's Bitcoin or traditional markets. Now, obviously, I've been buying all the way down from 40,000, so 40,000 and 35 and 31 and 27, and I'll be buying at 24. And you know, this is the deal for Bitcoin. I consider all of it to be fair value when you put it into a broader picture. So we're just zooming out here on the Nasdaq, right? Bull market began for Bitcoin around, well, my entry point is around the 1st of April, just before the 1st of April. So around roughly about my average entry point is about 4,000. So that means that currently, you know, a Bitcoin is still worth significantly more. And even from this low to that peak on the Nasdaq, it's 125% return, which is good. And as we are at the moment with 67% return, it's still profit. It's still profit. You would expect still profit on something like this, which is an up-only chart, right? Up-only charts over long-term time frames require entry points for you to partake in the market, right? And this is why I dollar cost average into Bitcoin, because it's faster and the gains are bigger. And I've got nothing against the Nasdaq, but if I had the choice of an up-only chart, I would choose Bitcoin, obviously, as I have chosen Bitcoin rather than being stuck in a major index. Now, there's pros of being in a major index. You can stick it in your pension. You can, you can effectively avoid a large, if not all, tax on something like this through ISAs and pensions, and you don't get that luxury with crypto. But I'm happy obviously to pay my taxes with crypto because you make so much more out of it. So there's pros and cons either way. But what I'm trying to put across here is that if you're dollar cost averaging into anything, even the Nasdaq at this point, you have to consider it to be where's the fair value. So I've got an example up for the Nasdaq, which is Facebook, right? So Facebook's part of the Nasdaq, obviously. It's a major behemoth tech stock here, and we have retraced to the tune of about 56%, lower than the pre-pandemic highs. So this is before money printers were turned on over here. So everything was normal, you know, it was just ranging, it was just doing its thing. Again, one of those up-only charts, as we all know. And then pandemic hit. No, money printers go on. Wait, hangover starts as the party is finished, and now we're down to the tune of about 56% or something like that from its peak, just like Bitcoin, right? Just like Bitcoin. So everything's being hit to do with rate hikes. It's basically as simple as that. Rate hikes trying to tackle inflation. Now, as we discussed a few times since the last CPI report, inflation has started to slow dramatically, but it's still going up. It was 1.2% higher in March, and in April it was 0.3. So I'm expecting, after, I suppose, because the previous rate hike, which was just took place a few weeks back, was it 0.5%? That was the biggest one so far this year. That's not yet filtered through or been digested by markets. That is going to be digested by the next one. And if inflation's already started to come down a little bit or started to slow, that should be all we need to see an actual change in the figures. So to show that inflation has peaked. Still going to be high, and it's still going to need to be dealt with. And the Fed is still going to do more rate hikes, right? They're going to do another one next month, probably by another 0.5%. All of this is not going to be good for markets. But what does it generally mean, though? It means that the main issue is inflation, which is likely to see a peak next month, which means that for fair value next month we can really consider strongly about thinking about picking some of this stuff up, some of these stocks. And we can also think about the correlation, which is clearly evident, especially when you look at it at pre-market to Nasdaq and with Bitcoin all getting rejected at the same place at the same time. I think the correlation is going to be good. So I would expect that next month will be a much better environment to think about even just trading, never mind generally buying back in. Unless, of course, you're like me and are happy to dollar cost average in from selling higher and buying lower. That's generally the name of the game, really. And obviously, Bitcoin is a faster, more movable asset than any of these major indexes or even the stocks, to be honest. But we are thinking about fair value, and if we think about fair value for anything, I would think about the pre-pandemic high as a precursor to what's fair and what's not. This was crazy time. This was what should we refer to this as? You know, I suppose the after party, or it's just a general party, really. Stocks and shares party. This is where things were normal. We were ranging everything. Oh God, pandemic. Then money printers turned on, up to the top. Money printers turned off. Back down to square one, lower than where we were before the money printers was on. Call this, I would say, a fair value. Now, something like obviously Facebook, it's doing okay. You know, positive earnings reports, everything like that. It's looking quite good. It's been oversold through association with the way that the market's performing, which is effectively down due to rate hikes. But there is going to be a point where you have to think, right, where are we going to get back in? I think next month with the peak inflation, all these charts will be revised, seeing where they are in comparison to where they were prior to the money printing being turned on. We can see here that the money printers were turned on at this particular level. We're lower than that now, so you could argue that this is a fair value for something like Meta, which is an up-only chart with a decent projection, who are branching out into significant areas of tech that no one's really doing, and obviously they've got the capital and the influence to do that, so the projection for something like Meta is good. What we're looking at here is something that's worth probably buying when it comes to next month, when it comes to the peak inflation or leading up to that. I think it's pretty much guaranteed that inflation will peak next month, and so in the any kind of next major dump for these sort of stocks, or any stock with a decent up-only projection, is probably better than fair value. I think it would be a steal, and it would be worthy of an entry point. We're not looking for V-shaped recoveries. We're thinking about partaking in a market, buying into stocks with good projections, and also this stock is a very big beast which takes an enormous whack on the Nasdaq. We're looking for everything really to start to move up from next month, even if it were just for a period of a couple of months throughout the summer. We're not looking for the economy to turn around and look much greater than it does right now. It's still going to be on its ass. There's always going to be these problems that we're facing outside of inflation that cause inflation. We talk about them all the time, so I won't bore you any further. But we are thinking about what's fair and what's not fair value. Where would you like to buy back as a market participant? And the reason I keep referring to stuff like, Nasdaq and now Facebook, which is just one little piece of, well, it's a big piece of the Nasdaq, but it's a piece, is because we're coming down to what an investor would consider to be a fair value, where they will start to pick it up. So I've been dollar cost averaging into Bitcoin, whereas other people for stocks and shares haven't really been doing that. But at these current levels, moving into next month, when the inflation is likely to see a peak, it would start to be dollar cost averaging into things like Facebook, things like PayPal, things like Apple, or things like Amazon, things that are all going down but have a projection of going up greatly over time, over a prolonged period of time. Which is what all of this is. This is what it is. This is, whether it's your pension or just the stocks and shares account that you've got, you do have to have an entry point at some point, and the best charts are the up-only charts, like Facebook, like Amazon, like Nasdaq, like Bitcoin, and you do need to think about where it is you're going to get back in. And because nobody knows particularly where the bottom is, because we can all see that the correlation of all these charts, they're all going down. It's not Bitcoin specific, it's not Facebook specific, it's not Nasdaq specific, everything's going down, and we all know why it's going down. It's because of Federal Reserve monetary policy, and not just Federal Reserve. I mean, all countries are having to deal with inflation. They're all doing it the same way. And inflation for at least the States looks like it wants to peak next month, which means confidence should start to resume, and people will at that point start to dollar cost average, even if we go down further. The Nasdaq could easily drop another 10%, maybe even another 20% before it reaches its pre-pandemic high. That's 20% away from where we're at right now. That's a 20% drop. So the Nasdaq itself, being propped up by some of the big players, has still not reached its previous significant low, unlike Facebook, unlike many of these other stocks. So it surprisingly came down to this level and lower. Look at something like PayPal, it's even down below its March crash. So there has to be a point where you think, right, reality needs to resume, and it will. And there has been a massive overreaction in the markets, generally speaking, on both the upside and the downside. And now we're approaching what I would consider to be fair value for stocks, and again, approaching. So I've been dollar cost averaging into Bitcoin, not been dollar cost averaging into stocks. However, I will start dollar cost averaging into stocks from next month, or just before the next CPI inflation report, as I expect to see that it has peaked. And if I'm going to start doing it with stocks, and again, I'm a very careful, because I'm from Yorkshire, obviously. People from Yorkshire are quite tight-fisted and careful with their money. Look after the pennies and the pounds will take care of themselves. That's the attitude around here. So I am quite a cautious trader, but I will start to dollar cost average into some stocks from in the beginning of next month, I would say, regardless of where they generally are, because of that the projection of what inflation is likely to be, which is going to be slowly creeping down towards the end of the year into next, where it probably will find itself at a comfortable level around 2% or thereabouts. So, with that said, what is the fair value for Bitcoin? I would argue that the fair value has already been reached, and anything lower than this is a bonus. So that's why I've been buying all the way down, and I will continue to do that. And I expect that if we haven't already reached the lows are quite close, and the lows could easily be between that 200 and that 200 exponential and 200 simple, between 22 and 25. And again, if that is the absolute low, just think about what that might mean. Like, I didn't buy the absolute low down here, I bought close to it. So that's 3,000, my average entry was 4,000, right? I remember it clearly, and then, you know, it's done quite well for itself. Even now, still up 600% from roughly that low. Not too bad, right? Not too bad. And again, obviously there's been a lot of trading going on in between all of this. It's been highly profitable a few years. But what I'm trying to get across here is that no one absolutely buys the low, no one absolutely sells the top. You buy into what you consider to be fair value, and Bitcoin's a different kettle of fish now than it ever was, right? It's got, you know, it's very different, and people will now start to see it as the like a major index for crypto, which is effectively what it is. And what's the fair value? Well, I would say that the fair value is definitely here, and certainly here, and any lower than where we're at right now is fair value. So see it from my perspective, hopefully. If you don't, that's fine. Everyone's got their own style, everyone's got their own projection. If you're looking for fast gains, quick trades, this might not be the time for you, but next month the playing field will be slightly leveled if we do see a peak inflation. And it start to come down, then yeah, more confidence can enter the market, because at the moment when no one really knows if the economy is getting better or worse, it makes all this like it's trying to drive with one hand tied behind your back, and you know it's difficult. It's a difficult trading environment. It's not really much of an environment, to be honest with you, to trade. We're not looking at good looking charts. They're all looking bad, but they all share a common denominator, which is a bullish dollar to do with a hawkish Fed, basically, you know, and that's fine, and that is fine. So eyes on the prize, right? Whether you're in stocks or want to go into stocks, or you want to be buying Bitcoin, I would argue that the fair value is now, although we could go down lower, this is a fair value for Bitcoin, and we will be looking for you know, a projection of Bitcoin. Whether we go down lower to sweep these lows first, we will be looking for a recovery like we always do. It's an up-only stock, up-only asset. It is an up-only chart. People recognize that now, just like they see with major indexes. They are up only. We want a position in it, all right? We want a position in it. Where's your position going to be? That's the question. Are you going to wait for the absolute low to be hit and try and sweep those lows? Or are you going to be dollar cost averaging on the way down, like me? I don't know. What's your time frame? What's your expectation? Do you have a plan? Because if you have a plan, that's great. You'll be able to just follow that plan through. If you don't have a plan, you'll end up tearing your hair out, or maybe just forgetting about the crypto and all markets altogether, and probably only revisit them once again when we start to see the mania phase, you know, or a mania phase, and then it'll be a vicious circle for you. Make the plan, stick to your plan. Think about the broader picture, which I think is likely to be a bit more clear from next month. Right, there you go. It's a long video. Hopefully it made a load of sense. If it didn't, please let me know. Otherwise, feel free to join the Telegram. It's free. Links in the description. And the Patreon we do twice a week as well. Anyway, have a nice day, guys. Take it easy.